Tuesday, the 9th of January. Welcome, everyone, to the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day as we had a little bit of movement today. A couple things that we can talk about. But for those of you that are new to the channel, new to the video, thanks for making your way here. Make sure that you subscribe so that you get the updates as they happen. We do the same thing each and every day on the Daily Market Commentary. We look at the same 10 to 12 futures markets. We identify potential turning points, and we look for possible turns. But the key is, once we draw lines on the charts, we leave them on the charts. And the reason we leave them on the charts is because we want you to see how trades may develop over time. These potential buy and sell points, that existed in the past may well exist in the future, depending. So it works really well for you to learn about how these turning points, change over time. So let's go ahead and dive into it. Starting with the S&P. Now today, had a little bit of an early run up, and then we got a sell-off in the afternoon. Little bit of a sell-off in the afternoon, not gigantic, but enough of a sell-off to wake people up, right? We sold off about 10 points in the afternoon. Still finished the day in positive territory, but had eaten away most of the gains. So maybe we'll get a bit of a pullback in the markets for tomorrow. And I've said that for about a month straight, and we have yet to get a real good pullback. If we do, still even on that smaller time period, this is our best opportunity. Simply because it acted kind of as a resistance point in the past, and that old resistance could very well act as new support. Now, I will tell you, this is one of those situations. I sent a picture to a friend of mine today where you just hate it when you just miss by a tick, and that's exactly what happened here, right? I mean, this got as low as, I think we got as low on this candle as 35 or I'm sorry, 36 half, and my entry was down here at 36. So missed it by about a point, half a point. But either way, the level's still valid. It still counts. I'm still going to keep it in play as we head forward. But once again, it's at a purple level, so it's a slightly lower degree of probability. And the dashed line means we want price to come in, and then we would get long as it comes out. Now, for those of you that want to be a bit more aggressive, if you are, a bit more aggressive, there's going to be a potential short. If you short one of these rallies up to these reversals here, if you think you can make some money on the way down to there, which there's money to be made on the way down to there, for intraday traders, I'm not going to do that. I don't really want to short at this all-time high. It just doesn't make any sense to me. I'm going to wait for a little bit of a pullback to get long. Nasdaq as well, same area way down in here. Yesterday, oops, I'm on the 5-minute chart still. Hold on a moment. Yesterday, we had spoken about, on the Nasdaq, we had spoken about potentially an opportunity somewhere in this range. I didn't leave it on the charts because I decided I wasn't going to put it on there. You got to have the risk to be able to get that. Some people popped in and took that, so I got a couple of comments from people that were able to take that little move up, which is good. I'm glad you're able to catch that little move. I think that there could still be a little bit of a play down in here. So right in here, though I don't really have a highlight set up on it, I think that we could get a little play on this area through here. I'm gonna put some markers kind of around it, right through here. Now remember, this is off the hourly chart. So the hourly chart, I use the green lines. So we may get, if we get a little bit of a pullback down into here, you may get a chance to get long coming off of this area here. That area doesn't really make itself known in the S&P, but it does show up pretty well in the Nasdaq. So moving on to our commodities. So crude oil, for those of you that were able to get long on this little trade right here, this one's continuing to work out pretty well. I know some of you took probably half of the level here, but it's continuing to move up from that entry point right in there. I talked about taking your stop and moving up under here. I would now take that stop and move it up under here. And the reason I'd move it up under here is because I got a little bit of a fair price value area there. And we could get another pullback, another bite at the apple on a smaller time frame to get back in to this trade somewhere down in here, but you might have your longs to, your stops, maybe move up your stop and lock in some profits. So this is one that we are, if you were able to catch that one, is still continuing to, to move higher off of that hourly chart. Okay. Gold. So gold, which is, if I look at this hourly chart of gold, if I don't really think much and I just look at this hourly chart of gold and I go back and look at, it's actually kind of interesting to look at. It wasn't the gold. I'm sorry. It was the Nasdaq. If I look at that hourly chart of gold, so here's my hourly chart of gold, look at it through this shape right here. And now look at the Nasdaq, which we've just formed, right? It looks kind of, that area in gold right back here looks a little bit similar to this setup that we're just kind of putting in here in the Nasdaq with that big expanded range and of 2 down. So, once, and look at gold, it got a little bit of a pullback and then rallied higher. Now, I still think there's an opportunity in gold down here at 1300. I think we may actually get a little bit of a reversal from this point where we are right now. This is a good time to play candle-to-candle trading on the hourly chart since we just got lower than this previous candle's low. We're at a reversal point. This is a good opportunity for candle-to-candle trading using the hourly chart with your stop right above here. You're in the trade literally right now. And this one is actually a setup for the hourly trading style, if that is one of the styles that you like. Let's go take a look at our bond trade. Now, the bond trade is the one I was most excited about from today, as we had been talking about a potential breakdown. And remember, our rules on a breakdown was that we had to have room to roam. We had to have an area that had been tested a number of times, and that's exactly what we got. And boom, price broke down through here. Now, one of the things that we said is if you do get the breakdown, your stop loss has to go above the pivot high from the breakdown, and we got the pivot high right up in here. So we got the breakdown. So this little pullback here should not get you stopped out. Our target was 123, so that came down and hit target in a day. You don't have to be out of the trade. You can continue to allow it to run. If you're still in the trade, I would take your stop and move it down a bit. Not a bad idea, from a protection standpoint, just to protect some capital if you are moving it down a little bit. So, technically, this still has some opportunities left in it to continue to run down. When I look at this on a daily chart, we're coming into this little region here of fair price. So this little fair value area, which has existed in the past. We've come into that here on the daily chart. So just keep that in mind. But interestingly enough, I'm going to throw a quick study up here of moving average study. And it's broken below. It's just using this 20-day moving average as really as really kind of that falling resistance point, if you will. And we've gotten kind of far from the mean, right? We've deviated pretty far from the mean. So I wouldn't be surprised to see a little bit of a rally back up before you may get another bite at the apple right in here to get short again. So I still like the short overall in these 10-year notes. I actually had a friend of mine today talk about the weekly. We're well below it on the weekly as well. So just keep both of those in mind. Next, let's look at the Aussie. So our Aussie still nowhere, didn't quite get into either one of our levels on the Aussie, as it's just kind of chopping around, bouncing between these two areas. There may be a trade in here in the Aussie, but we're not quite near there yet, so I'm going to leave that one be. Maybe we'll look at that tomorrow as an opportunity. The Euro, so the Euro trade I talked about yesterday. I said price got into here. It's just kind of chopping around. I didn't expect much movement out of it. I thought it was going to do this, and that's exactly what it has done. So this is a good chance to remove the drawing, because that level didn't work out. But if you're watching the Twitter feed, we talked about managing that stop tightly, because it's just it was really a not a great opportunity. Now, I did say, however, that if or when that level fails, because I didn't feel once the way we arrived into it, I didn't feel like I was in love with it. I still do like this area here for a potential candle to candle style of trade, meaning I'm not getting long until I get a candle with a higher high. And then once I get a candle with a higher high, my stop goes below the prior candle's low. Much like we've done in the gold trade, we did it in the bond trade, we've done it in a number of trades in the last couple of weeks. So if you've been watching regularly, you've seen some of these trades work out, and they've worked out really, really well. And so just keep that in mind as a potential using the candle to candle style. Now, if we break below here before we get the higher high, then it's not going to work out. Excuse me. All right. The Canadian dollar, once again, still chopping between our areas. Nothing here to talk about. Move along. Nothing to see here in the Canadian. Great British pound, still chopping around. I'm going to remove this. We talked yesterday about removing the breakout, about taking your profits off the table on this breakout if you did get long on the breakout. We are setting up, however, now for a decent little breakout to the downside. And what I mean by that is, let me maximize this, make this a bit bigger. So we've hit this a number of times, and we keep bouncing up from it. I'm going to actually put this on here now. I think this could be a breakdown short opportunity. If we get below this area here, and I think that there's very realistic to believe that price could get to this 1348 area, which was this resistance point in the past, and could get even a bit lower than that. So keep this as a potential breakdown going forward. Japanese yen still hanging out in between our two areas. Earlier today, got a tweet about a level from here. So Dennis had sent me a tweet about this area here. And I said I liked it on the confirmation a bit better. And the reason I chose the confirmation was simply because I wasn't sure that the arrival was going to be into there. So it actually got a nice little bounce off of that area and has moved down. So nice eyeball for those of you that were able to see that one. Good setup off of that area here. Still have the extremes set up and in play, and then I've got a couple of other potential reversal points down a little bit lower. But all in all, we're still in an upward trend, and we're at the bottom of a rising trend channel. I don't completely disregard trend channels, and so we may get a little bit of a reversal back up for those of you that are very small time frame traders. So with that being said, I'm going to turn this thing off for today. I hope if you have any questions, you feel free to reach out. My email address is chuck@iiefinancial.com. Go ahead and visit my website, iiefinancial.com, for articles and podcasts as we put them up. And until next time, I will see you all soon. Later.